Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Friday, everyone. It is Friday, February 7th. We got the big data today, and that is the jobs reports we've been waiting for all week from the Bureau of Labor Statistics. So the first item on the docket will be the non-farm payrolls for the month of January. So the previous 2 months, November and December, had a revision of an improvement, well, a revision to the positive side of 7,000 new jobs. But December's payment here, or numbers here, was 145 and it was improved to 147. The previous month had an improvement of 5,000. Forecasters calling for about 165,000 new jobs for the month of January, and it well exceeded that, came in much hotter at 225,000 new jobs for January. So fantastic numbers right there, much higher than what we expected. Unemployment rate for the month of January increased, so we went from 3.5% previous month when the forecast would call for 3.5% to 3.6%. And if you look inside the numbers, it's because we're seeing more and more people coming into the labor market. So now we have more people, which increased it when you look at compared to job losses and the people coming in. That's why we have a little bit higher unemployment rate. So this is good news in the sense that we're having more people getting confident about where things are at and they're coming into it. Now, also, if you look at here, average hourly earnings, we went from 0.1% increase in December, 0.3% forecast, and came in expectations in January. So we're on pace for 3.1% higher average hourly earnings, which is a nice thing. People are liking to get paid more. And of course, it's costing employers to retain those employees because the biggest, if you look at the confidence levels, the biggest thing complaint they have is finding qualified employees, and they're not going to want to let their employees escape to other companies. So that's a good thing. Last but not least, this is kind of a minor report. This is the wholesale inventories, so we can see that it declined at least 2 months in a row here. So in December, it dropped 0.1%, and January it dropped 0.2%. So we'll kind of see if this changes now that we got the phase one with China in place. Maybe you'll see that picking up and more jobs are being created. So you might see this kind of pick up here in the next month or so. So we'll keep our eyes on that. But again, it's kind of a minor report, so it's not like a high impact. It's not going to affect us dramatically or anything, but something we'll keep our eyes on. Headline news, stocks are down. So why are stocks down when jobs data is such good news here? It's because right now we're looking at possibly good news is bad news. Stocks are kind of in an overbought position. They were as they're forecasting the values of these stocks, that are also forecasting ahead that the Fed might do another rate cut in June. Because we have good job numbers and the data is looking really good for the economy, they're now thinking that the Fed may not. So that may be now off the table. So being an overbought position, now you're going to see some of them pairing some of those losses here ahead. So just and plus we're going into a weekend, and with this whole coronavirus thing, they don't want to be stuck too much uh, in what they call risky assets, which are stocks. And as you'll see here coming ahead, mortgage-backed securities is more of a flight to safety. So we'll get more of that coming ahead here. So as you can see here, we're back up to this level, the ceiling, and been testing earlier today. We're up about 14 basis points. As you can see, we were up higher, but right now we're about 14 basis points. This is going to give us a better pricing today from what we saw yesterday in terms of mortgage rates. So that's obviously good news. And as you can see here down the stochastic, we could potentially have another crossover and continue going upwards. We may, perhaps it might be a catalyst. We'll see by end of the day if that how this plays out. But right now, it's not showing the strength to break above it. But we could get a little bit more steam later in the afternoon. We'll see. Uh, Same thing here in the yields. You can see a possible crossover here. We're down right now we're down to about 1.59 right now in the 10-year Treasury right now. All right, so good news. Mortgage rates are up. We had great jobs numbers. Stock market's down. Obviously, that's not great news, but it's because they're kind of in an overbought position. They've been going up for so long that they're probably getting a little overvalued with all the trading. But sometimes the correction is needed. So, anyways, the good news is the economy is doing well, and of course, as a result, we're getting a little bit better pricing in our interest rates. So, if you guys are in the market in locate California, look whether it's to buy or refinance, please reach out. You could You can see my information on the red here. Just either wherever you find this, you can direct message me, or you can also email me. Email would be the quickest response, as I get that a little bit more frequently. All right. So, anyways, you guys have a great weekend ahead. We'll look forward to see you guys on Monday. Thanks for watching. Bye bye.